Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that sellers were active on any rotations back up towards the 44 to 45 area. And short term, our bias is still bearish. But bigger picture, we know that ES could simply be establishing a wider range at this point. So heading into the open, the immediate resistance is 43 quarter to 45 quarter. And if the market is really weak and internal start off on a pretty poor note, then even this area can cap the short-term upside off the open. In the event of a reversal and a break higher, 47 quarter to 49.75 is primary resistance above that, and we're going to be using 52 to 54 as the micro bull bear zone. So short term, even a extreme bounce back up to 52 to 54 can still technically attract responsive sellers in this market and result in a rotation lower. But ideally, we don't really make much of a bounce, and we actually head lower pretty much off the open and hold below the overnight high. On the downside, 37.38 was one of our downside objectives, which has already been hit. The extended objective below is 33.5 to 35.5, and I think that given the overnight weakness and given yesterday's sell-off, there is still potential to test 33.5 to 35.5, and in the event of a extreme range extension, even 29 quarter to 31 quarter has potential to be tested. But eventually what we're looking for is a reversal and a bigger bounce back into the prior day's range. So typically when you get a outside day like yesterday within the context of a bigger picture uptrend, you can still get a range extension lower, which has already happened, but eventually, later in the morning or perhaps the afternoon, the market can still reverse and head back up towards the prior close and some of the prior resistance areas, which would be 47 quarter to 49.75. So, if we really extend lower, then of course, this target becomes a bit more out of reach. But off of 33.5 to 35.5, we can quite easily bounce back up to 39.75. The zone still calls for some caution because, if you're fading momentum, you also have to time it correctly, and it's not simply a matter of fading the zone, but long setups are going to be safer in the S&P compared to the other markets. For example, Russell is much weaker than NQ and ES, so short setups can work better in Russell. So any pops in TF, back into its prior day's range can attract sellers and result in some pretty nice rotations lower. As far as NQ goes, as long as it's holding below 89.5 to 92, sellers can be in firm control. And even on pops higher, we can still get sellers in that market as well because the overall theme right now is short-term bearish. So right now, heading into the open, overall still expecting a range extension lower, expecting 33.5 to 35.5 to get tested. I do think we can get responsive buyers here on first test, but you do want to focus on getting some good trade location even within the zone, and ideally, you get some short-term exhaustion and kind of a flush into initial support if you're going to fade it. If the momentum seems really heavy, then perhaps be a little more careful there, because even 29 quarter, 31 quarter does have potential to get tested if the market bearishness is more extreme. But overall, the expectation is for a balanced type session. If we head lower, expecting buyers to step in, and on any pushes back up, expecting sellers to step in. And overall, the idea is that we will remain range bound, but the range could be initial support to initial resistance, or the bull bear zone to pre-market resistance. So those are the main ideas. Let's see how well the sellers can maintain short-term control off the open and take it from there.